The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Oscar Wilde once said, "Nowadays the world is full of people who know the price of everything and the value of nothing." It's easy to get caught up in the price and lose sight of the bigger picture. With me today is not only a great portfolio manager, but an avid motorcycle world traveler, Rob Collins. Welcome, Rob. Thanks for being on the show.
Hi, Sybil. Thanks for taking me.
I want to hear a little bit more about this motorcycle traveling. Where have you been?
Boy, I've been through a lot of Europe, which was a lot of fun. I really recommend Iceland, not just for motorcycling, but it is a fascinating country and really stunningly beautiful. Probably the neatest motorcycle trip I ever did was riding the Arctic in the winter. I did the world's longest ice road for a cancer fundraiser, and that was a really neat experience.
Now, wouldn't that be slippery on a motorcycle?
Well, you know, surprisingly, with planning and with preparation, it's really quite easy. I had studded tires on the motorcycle, snowmobile suit, electric undergarments, and it was really quite easy and quite a lot of fun.
And it was a fundraiser.
It was a fundraiser. We raised money for cancer research, so
Fantastic.
It was great. Yeah.
Now, how did you get into this business?
I started when I was around 12 years old. I got the investing bug. A family friend of ours is a professional investor. And when I went over to visit him, he would update me on his charts and what's happening with commodities and bonds and this and that. And I just got fascinated by the whole process and how he's making money. And I started studying it from that age, and the passion has never left me.
That's fantastic.
Yeah.
So what do you think investors need to know about fees?
Well, I was just reading some research in the last few days, and I saw a stat that really surprised me. And that is that 40% of people that have an investment advisor don't even realize that they're paying them fees.
What?
Yeah, and so as a consumer, I think that's a big mistake. How do you know if you're getting good value if you don't even know what you're paying your advisor? So, and you are paying your advisor. If you have a professional advisor, I assure you they're getting paid.
Well,
right?
yeah, nobody works for free unless you're in volunteer work. But
yeah, and usually investment advisors aren't doing volunteer work. So I think it's important that people know how much they're paying their advisor. That's the first step of being a good consumer and seeing if you're getting good value.
Now, those people, those clients that know what they're paying and always trying to get the best deal, do you see some mistakes in that?
I do, yeah. There's two sides to the coin. And to quote some more stats of BC investors, there was a recent survey and they found that 57% of BC investors really feel they need help in selecting the correct investments. And that 54% of investors really didn't have any idea of what their portfolio would behave like as market conditions change. And then the last one that really I find is really quite concerning actually is that 49% of people in BC have no idea of how much money they need to save to retire and whether they're on track or not.
Wow.
And so you're not going to get that from a discount broker. They have their place. They're great for low-cost transactions. But a friend of mine uses a term called cheap at any price. You don't want to throw the baby out with the bathwater. You need a plan, and you need your portfolio to be adjusted to changing market conditions. And for heaven's sakes, get a pro. Don't ruin your retirement just because you don't know what you're doing and you're learning on your own money.
Get some good advice.
Yeah.
Well, I remember my husband's grandmother used to drive around to 3 different grocery stores because one had oranges on sale, the other one had bananas on sale, and the other one had a block of butter on sale. Well, she'd spend $5 in gas to save $3 in groceries.
Not great value.
Not great value.
Right.
And so the same thing happens with investors when they're trying to figure out the value they're getting. With an investment advisor, what are some of the top things that you do or other advisors do to add value for the fees they're paying?
Well, you know, just the standard things around portfolios and planning. So when I bring a new client into the practice, you do a discovery process, find out what the client is actually trying to achieve with the money, what their time horizon is. Very important to have an understanding of the client's money philosophy, what kind of risk they're willing to take, so that you don't make the portfolio too aggressive or too conservative. Because if you do that, all kinds of behavior mistakes start to happen. Clients get nervous and say, cash me out, or clients get bored and say it's not aggressive enough just when you're at the top of the market, typically.
And education, I mean,
Yeah.
explaining to clients what risk really means and
Yes.
what type of investments you get for that risk.
Educating clients is key so that they can stay in the right investments and understand why they're in them, so it's not just a big leap of faith for them.
So what are some of the options that clients have when it comes to paying fees and paying for service?
There are a number of different ways a client can pay their advisor, and it really depends on their preference and also what their situation is. So the traditional way was having a commission account, and you would pay your advisor a commission every time you do a transaction, like a stock transaction. A lot of products have hidden payments in them, which is something that I think the industry is starting to address now, thank God. So sometimes when you buy a GIC or a bond, you never knew how much the advisor was making. And I think that's up now going the way of the dodo bird.
Yeah.
So
Although I guess the flip side to that is it's fine to explain to the client how much they're paying in fees, but the client really needs to also stay focused on the bottom line. So when buying a bond or a GIC, the question to ask is, what's the yield to you as a client? And what's the fee you're paying to get that yield?
yeah.
The more information often is better, but not always.
Well, you know, that's a good point. And I think a way that is becoming a lot more popular in the industry is fee-based advice. And basically the client pays a fee, and then it's all you can eat in terms of advice, trading, financial planning, estate planning, performance reporting, service, education. All that is bundled in, and the fee is right there for you to see and measure, and it's much easier for a client to see if they're getting good value or not. So a lot of advisors are moving in that direction, and that's something that I'm a big fan of.
And then there's no conflict of interest.
Well, it
because-
minimizes it.
Yeah,
It certainly
the-
minimizes it.
The advisor then is sitting on the same side of the table as the
Right.
client,
Right.
and they're not getting compensated based on the number of trades. They're getting compensated based on performance in most cases.
They are. So in a fee-based system, the fee is based on how much asset the client has with the advisor. So the way the advisor gets a raise is by growing the asset, which is exactly what the client wants. And if the advisor makes mistakes, or the markets don't do well and the portfolio shrinks, the advisor gets an instant pay cut. Well, that really does put them on the same side of the table as the client. They're business partners.
Yes.
So I really like that approach. That's the approach that I like to use.
Now, emotions do get in the way, and I think one of the big value added from an advisor is telling clients what not to do and protecting them from themselves.
Yeah.
So is there a stat out there on performance on a do-it-yourselfer versus working with an advisor?
There is.
Is there a difference?
Yes, there's a research company called Dalbar, and they've been doing this for a very long time. And they measure do-it-yourselfers and their rates of return versus the investments that they're buying and their rates of return. And the most recent one I saw was they were measuring the S&P 500 index, which is an index that anyone can buy in the market. And its average rate of return over the last 20 years was 9%.
Yes.
And the average do-it-yourselfer investor that was buying the S&P 500 was making 5% a year.
Wow.
Yeah, so...
Well, it just goes to show you that you better have a look at what you're getting for
Yeah,
what you're paying.
exactly.
Because there is a lot of value there.
Yes.
Rob, thank you so much for
You're welcome.
joining me today.
Nice to see you.